Hey everyone, welcome to this second webinar that BGW has attempted, and hopefully this one will be better than the last one. We still had good reviews, but we learned a few things and we've moved to a different platform, which is Zoom instead of GoToWebinar, and I think this is going to be a better experience for you guys, so hopefully that's the case. A few specifics first before we get going. First of all, this will be a 1-hour webinar, and given the amount of questions that we've had and the fact that we've had 346 people sign up for this or register as of about 10 minutes ago, if we go longer, that's okay. This thing will not cut us off. Also, if you have to leave, we will publish this thing on the recording on our BGW CPA YouTube channel. That'll go up first, and then we will have it up on our website as well. It just takes a little bit longer to get up on our website. So those are some of the specifics I wanted to cover. Also, kind of the purpose of this thing is just to help you guys and help all of us navigate and benefit from this new CARES Act and the PPP in particular, as well as the EIDL. Provisions on that. We've had about 50 questions that have already come in, so we'll deal with those things. I'll be towards the end of this seminar. Also, there's a Q&A button. If you kind of hover your mouse over the screen, you will see a Q&A button. I'll be monitoring that and we'll address all of those, and hopefully this entire webinar will cover all of those things. And finally, I want you to know this is very much in keeping with BGW's purpose, which is to make a difference in the lives of our clients and our teammates, as well as our community. This is really important. And so I'm going to give a quick shout out to Charlie Maloof, who's the CEO of Broad River Retail, doing business as Ashley Home Stores. And he sent me this t-shirt yesterday. So Charlie, thank you very much. I appreciate it. So I'm going to go ahead and pass this over to Adam, and I will cut myself off, and then we'll get going. Thanks so much.
Thank you, Gary. I appreciate it, and appreciate everybody being on. So with respect to what we're going to go through today, it is going to be in the weeds. Those of you that know me pretty well know that I like to get there pretty quickly. All that said, so I apologize in advance if I go over somebody's head. That's why we can re-listen to it. The purpose today, though, is to give you as much specific information for what you need to do in terms of next steps with respect to the payroll protection program paycheck protection program. I keep on calling it payroll, and the economic injury disaster loan program, as well as the tax credits that are out there. Again, we're just trying to give you enough information so you can start making decisions and start doing your modeling and forecasting. So all that said, it is really hard to be a subject matter expert these days because this just came out. So you do your best with the job, and then someone produces some interpretation at the Department of Labor or the Department of Treasury, and all of a sudden your assumptions change a little bit. So what I'd ask is that I think, again, most of you folks that know me know that I'm not afraid to look stupid. So if you have information that is contradictory or you've heard a different interpretation, feel free to ask it as a question. You're not going to hurt my feelings. Again, we're trying to do the best job we can to stay ahead of this. So all I'd ask is that the contradiction hopefully is from an authoritative source versus my brother's, cousins, uncles, sisters, dogs, babysitter, if that's something that you can actually do these days, and social distancing. Actually, it's fair to ask those questions too if you really want to. Again, there's no stupid question today because this is really important, and I think all of our businesses are really at stake here. Lastly, for those, I think a lot of you guys knew that my daughter and Julie started showing symptoms. It seems so long ago, 2 weeks ago. They're still in self-quarantine. They're slowly showing relief from some of the symptoms. We didn't get tested just because we wanted to preserve the test kits for other people, and we're just watching to make sure that nothing got progressively worse, which thankfully nothing hasn't. But shout out to my two sons because they really stepped it up to help out to get through this while we've all been trying to muddle through. So with that in mind, let me go ahead and get started here. All right. So for today, and keeping in mind that I'm still trying to learn to navigate this thing, for today, again, the format, we're going to go over an hour, probably based on the number of questions, but the presentation content itself is about 30 to 40 minutes. I'll forewarn you in advance. I haven't had a chance to dry run it, so hopefully I don't go too out of field on it because I drafted it about 5 o'clock this morning, so hopefully there's no spelling errors or math errors. I just want to make sure that I got the latest, greatest changes in if there were any that happened overnight. Again, I'm going to try to address everybody's questions that have already submitted them. But at the end of this, submit your questions, and Gary and I will work through them as we see fit. And again, we don't know all the answers because they're still drafting policy at this point. So a lot of this is conjecture and totally could change tomorrow. So just wanted to reference back to the Bain War Room plan that we referenced in the first webinar, stretched it out to encompass week 3 because that's where we're at. And really the focus should be around this defend against revenue declines and stabilize your operations to a new role, and then start thinking about ways that you're going to conserve cash after you've already hopefully done some modeling. So really the point of this is to allow you to understand the benefits that you're ultimately probably most likely going to receive as part of the stimulus packages, at least through the third wave, and there will possibly be a fourth wave. So you can start making decisions around what this week 3, week 4, week 5 activities end up looking like. So first off, in terms of what are the tools at your disposal? So the 2 things that are really out there that a lot of people have heard about at this point are the Paycheck Protection Program, PPP, and the Economic Injury Disaster Loan, which is EIDL. Other references that you see are PPP falling under the SBA's 7A at that point, or presumably afterwards, but then refinanced, offset by, okay, hopefully my internet connection is stable now. That would be very embarrassing. Offset by, whatever you end up refinancing, but the total max between the 2 is $10 million. Uses are payroll, rent, utilities, and mortgage interest. A lot of people have questions about what really is rent. Normally, as I go through this, a lot of you guys know that I'm an extremely aggressive person. In this case, I'm going to probably dial back the aggression sounded awful, aggressiveness in the advice that I give, because at the end of the day, these are pretty big dollars, and I probably would not be as aggressive as I might have otherwise normally been. So for this purpose, until there's other specific guidance, we're going to assume that rent is related to real property, not equipment leases at this point, mostly because of the definition of mortgage interest. Same with utilities. I wouldn't go far afield on this one and think of utilities as my antivirus software. Possibly you could make that case, but really they're thinking about, I think everything that I've read is really more related around the ability to operate your facilities rather than all of your possible infrastructure. So there is supposed to be more guidance coming out about that. But for this purposes, we want to be a little more on the more conservative side, because we're really using this to calculate what are we actually going to get. Payback period for amounts that are not forgiven, 10 years. Who do you apply to? You apply to the banks. When is the money available? The next 1 to 4 weeks. The period that's covered for the purpose of this definition is February 15th to 6/30/2020. We're going to have something later on in terms of all of the dates related to these programs. And in terms of eligible, it's 500 employees. Some exceptions to that apply. There's language in there around the SBA affiliation rules, which basically means that if you own a bunch of stuff and are in control of it, if you add all those things together, and if you're over 500, then you're considered an affiliated entity and presumptively would be unequal or not, exceed the 500 count. The known exceptions to this are, first off, if you're in the restaurant hospitality business, have multiple locations, each location stands on its own. Same thing with a franchise. The other one is that the SBA has guidelines on average size. So as long as the average size of your specific NAICS code is greater than 500, theoretically you could have more than 500 and still qualify because you would have been defined as a small business concern pursuant to the SBA. I didn't look up to see what kind of businesses were over 500, but it's just another thing that's out there. Personal guarantee, no, and the loan payments are deferred for 6 to 12 months. And on the right-hand column, economic injury disaster loans, or EDLs, those are up to $2 million. The uses are accounts payable, cost of goods sold, debt obligations, and you can also use them for PPP items. It's just that you can't double dip. I can't ask for a loan under PPP and get funding, and then also get funding under EDL for the exact same obligation. So at some point, and I apologize if there are dogs in the background there, at some point, there's going to have to be some sort of square up if you receive EDL funds or otherwise get EDL funds while within the PPP program while under the covered period, so that you don't double dip. Who do you apply to? The SBA. It's possible that banks may fund this in the future, but right now it's the SBA. They have streamlined the application process at this point to where it's a lot easier than what a lot of us went through in the very beginning, such that, when I sanity checked it on my own, it maybe took about 10 minutes to fill out and doesn't ask for any supporting documentation. And, frankly, ask for your bank account information at the very end so they can deposit the $10,000 grant that's available if you apply now. And in fact, some guidance came out from the SBA encouraging anybody that's filled out an application thus far to go ahead and reapply so that they can get the $10,000 grant, which is supposed to happen within 3 days of the application, regardless of whether or not you're approved. So presumably you could go ahead and apply for the loan right now, get your $10,000, and then at some point when the SBA gets back to you, either account for what you've already gotten under PPP, or alternatively, they could conceivably turn you down for some reason, but the $10,000 is gone permanently. Eligibility up to 500 employees. They did not waive the affiliation rules on this side of the house. And personal guarantee, not beyond $200,000. You do have to personally guarantee for any shareholder or owner that's greater than 20%. I haven't seen anything that changes that, but it could change in the future. And also up to $7.5 million is excludable in a bankruptcy proceeding. So even though it's personally guaranteed, if something really, really bad happens, it's discharged in bankruptcy without it being considered income. For loan payments, deferred up to 6 months, which is the normal SBA provisions. I'm sure that that could be extended though as well. All right, so what's my amount? This has been the key question that everybody's been asking because it's very confusing in terms of what's the definition of payroll. So as of today, and I have not seen anything contradictory, so if anything finds something contradictory, then please send it over to us. But in terms of calculating what's a wage is defined as my starting point, which is my wage, minus federal withholding, meaning the employee's withholding tax. Why they did that, I don't know. It seems a little bit crazy, but they did it. Employer and employee FICA and Medicare. Apologies, that first word's supposed to say employee, not employer, but it's all of the FICA taxes, both sides of it. Plus, you get to add back the employer portion of health insurance, the employer portion of the retirement plan. They haven't been specific about what this means. It just says retirement funding. So, there needs to be some rulemaking around, does that include defined or deferred compensation? Are there any limitations? Is it limited just to safe harbor? Do profit sharing matches apply? So, there's still a lot around what's going on with the retirement piece of this that I think is still unclear from the research that I've done. However, I think for this purpose, safe bet would be just to assume that, if you did safe harbor, let's just use that. And then you also add back in the employer state unemployment tax and income tax, but the income tax is already included in the wage number above because you're only backing out really the federal tax component of it, but you do get to have some add backs. And then when you add all that up and annualize it, any excess over $100,000 is excluded. So using the example on the right, you got a guy or gal making 150 grand, you got $150,000, assuming they're single, not really anything going on the dependent or exemption side. You're going to have approximately $27,000 in federal withholding, $10,415 in FICA. That's going to be just set. That should be a plus after the FICA, not a minus. But then you get to add back in the group insurance plan. I think in this case, I assumed it was around 600 and some change for the group plan, which I think is about what BGW's cost, plus your safe harbor 401k match, plus your SUTA. So all that adds up to, for this purpose, $126,000 of wage. So 26,337 would be excludable for the purposes calculation. So again, barring some different guidance, this isn't, you're getting a haircut, but because you get to add back some benefits in the state side, it's not as bad as we originally anticipated. And obviously, same thing's going to apply for people that make a lower wage. I've got an example of that later on in my scenarios. So what's forgivable when it comes to PPP? So payroll itself, using the preceding definition, rent, assuming that the lease was in force pre-2/15/2020, your utilities, and I just list them out, hopefully there's some stuff forthcoming, to the extent that they were in place pre-2/15/2020, mortgage interest if owner occupied, meaning that if you had the building on your company books instead of being in a separate real estate entity, you're not paying rent, instead you're paying a mortgage, so the mortgage interest itself would be deductible. All of this gets certified by the bank that made the loan based on the information that you give them. The guidance set forth in the law is payroll tax filings, both federal and state, to prove out your payroll, and then copies of checks, things like that a bank might ask for. All that, and then anything else the administrator might provide. So what's notably absent is any information related to actual damages that you sustained. So, right now it's just simply, what did you spend? For the reductions for FTE count, salary reductions below 100K annualized, as long as you've got people back in place, and we're going to go through that in an example, your salary reductions are back in place up to at least 75% of what they were pre all this stuff happening, then the entire amount that you pay for these things is forgivable, and it's also non-taxable. So it's just a one-time free shot in the arm from Uncle Sam, which is effectively all of us, since it's highly likely we will have our tax rates increased to pay for all this stuff. Okay, so some of the questions that we've had so far that I'm going to have to try to cover off on. I have covered off on the 500 employees previously. All that said, if I was going to guess how the affiliation rules might get waived in the future, it's probably going to be location based. So for example, if I'm, a foreign owned 100% and I add all those things up and, I'm over 500 employees, but my domestic location is 500 or less, things like that, I could really see them waiving the affiliation rules to get around, because the intent is to keep people working. I understand they're trying to not give benefits to foreign people, but if it means the loss of U.S. jobs, I see them, maybe waiving that a little bit more in the future. And also, the test of control, it's a pretty complicated test of who controls what. And I would probably see them just saying at some point in the future, hey, this is just going to be location based, which is similar to what the Family Medical Leave Act is. It's location based within a geographic boundary. What's an average full-time equivalent? It's silent on what that is, but if you use the ACA definition, it's basically anybody that worked 30 hours per week, and then you add up part-timers to equal 30 hours per week, and that gives you your FTE count. A lot of people have asked about, all right, so I had to lay some people off. I hear about this whole restoration exemption, meaning that I can have the full amount of the forgivable loan if I just rehire some people. So it's not really clear if that has to be restored in full on an average basis, or if it's literally, you know, the stroke of midnight, 6/30/2020, you restore it. What actually happens? Right now, most of the guidance that I've seen out there that isn't from authoritative source, just interpretations, it literally is if you just bring the people back, you know, before June 30th and have their salaries restored at their levels, not even made up for back pay, then you're going to have the forgiveness fully covered. Can we do EDL and PPP at the same time? Yeah, you can, but you're not supposed to double dip. And a lot of people have asked questions around, well, what if I don't have employees or my employees are pretty low? In that route, you know, say for example, you have a bunch of rental properties, you really ought to be looking more towards EDL for that purpose. I mean, still do PVP if you got salaries, but EDL is really going to be your best bet at that point, because you're going to end up using the money for other purposes. Now, the forgiveness amount is not going to be there, but it's also pretty cheap long-term financing. I've already made the EDL request. How does this impact PPP? Again, I feel like if you just make sure that you're not double dipping anywhere and just make sure everybody knows what you've asked for, then you should be in good shape. What about partnership income? And this is really going to apply to self-employed individuals too. So for self-employed individuals, which would be independent contractors or independent or solo S corporations, you are included in the ability to request relief. However, active partners, so the calculation is the same for $100,000 as you would for an employee, but it's silent on what to do about members in an LLC tax as a partnership or a true partnership where there are self-employment earnings, and this would be BGW. So we're going to take the position that we're considered employees for this purpose. However, that's not definitive currently one way or the other. If you use a PEO, it's still the same calculation. You're going to have to work with the PEO on how to get evidence of what was paid on your behalf specifically for this purpose. But for everything associated with the SBA and FMLA, which is really a lot of what this is originally sourced in, the PEO is not considered the employer for this purpose. If you have tipped employees and you're looking to pay them something in terms of how you calculate things, you could just go back to what they traditionally earned over the course of the year. That would imply that it's all been reported. So hopefully it's been reported. You could pick minimum wage, you could pick another number, but you have a lot of flexibility beyond the $2.13 an hour, or whatever the amount is we're paying the person, where tips represent a significant portion of what they earned. Probably where I wouldn't push the boundaries too much is that if you had a case where someone was making an hourly rate, they were getting cash tips that were pooled, and the cash tips weren't necessarily reported, which is actually pretty common. I probably would just default back to the hourly rate and instead of trying to give somebody a raise. And that's really going to be the case where tips aren't necessarily a huge portion of what somebody gets paid. Then do you have to prove damages? The answer to that is currently no. It's just a certification that used the money as intended. So when it comes to S corporations and their ownership teams, there's not really any rules around compensation there, but for the $100,000 limit that applies to everybody. So if you've been taking distributions, which really was our advice, what I would do is you're calculating this money and determining whether or not you should put yourself back on payroll. The answer to that is, yeah, highly likely you should put yourself back on payroll. you wouldn't want to exceed the $100,000 annualized limit number, but you should put yourself back on payroll. So the real question is, how much did taking yourself off harm you in determining the average? Because that's also going to be offset by the fact that if, for example, you did an after the fact payroll for some of the money that you took as distributions just to get your average up, remember that you're going to have to pay the payroll taxes associated with that. And it's also excluded off the amount that you're going to be able to apply for. So ultimately, it's just a math problem. I haven't worked that one out yet, but it's just something to consider. So I would for sure put myself on payroll post getting relief, and I would look at how much it harms me by not being on it pre-relief. So the other tools that are in the toolkit, I'm not going to spend a lot of time on this other than when it comes to our scenarios. But the three other tools that are available to you in terms of looking at your cash flow, the FMLA credit, that's when an employee requests to leave, which now includes because you're on a shelter-in-place order and the business has been shut down because of it. So with that, though, the Department of Labor has issued guidance that it's not required to offer this credit under that circumstance, but there may be cases where it still makes sense to do that I'm going to go through when we get to our scenarios here. The other thing too with the FMLA credit that's pretty interesting, they issued some guidance around teleworking. So if you have somebody, and this also would be BGW's example, if you have somebody that does have the ability to telework but can't be full-time anymore because they've got to care for their kids at home as an example, then your agreement between each other could be that they're working a reduced work schedule and you can get the credit for the offset relative to what they would have made normally had they been working. So the way that this credit gets funded, technically you're supposed to ask for a refund, but they put some guidance in the legislation that allows you just to short your payroll tax deposit, and you don't have any penalties and interest associated with that. To the extent that it exceeds your payroll tax deposit, you can apply for an expedited refund. For the employee retention credit, it's 50% of wages up to $10,000, which equals $5,000 per employee. This counts for big companies that aren't going to get any other relief other than the Main Street loans that there's not any guidance on, but could be coming out sometime here soon. So I definitely would look to this if you're above the 500 employee count. So it only applies when the employee is not working. So if you went to a shared work arrangement where somebody's working part-time, then meaning they're one day on, one day off, and you're still paying them for that one day that's on, then it's good to go ahead and look at this one until you've maximized the value of the credit. If it's 100 employees or less, they still could be working full-time. However, if your sales have taken a real big hit, then you can go ahead and apply for the credit until your sales are restored. But you can't double dip on the same people as you do with FMLA. So it doesn't double up to say $10,000 and then I get $5,000 over here. Presumably it'd be $5,000 in employee retention, then FMLA would be reduced by 5 in theory, although there's not guidance around that. In terms of unemployment, there's an additional 13 weeks of eligibility based on the existing requirements. There's also the shot in the arm that the federal government did that starts in April that goes for, I want to say 13 weeks. It's at least to the end of July. There's an additional $600, and that's regardless of what a person makes. So if a person makes less than that, then if you combine their unemployment plus $600, and that's more than what they make, they still get more than what they make. So in theory, I guess you could say, to somebody, what is somebody, are they really going to come to work? We've had a lot of those questions. Yeah, I don't know. I hope that that's not the case. I'm optimistic that that's not going to be the case. So I think that's going to be a case by case basis about what do you do if somebody just says, hey, I can get more, paid more to stay at home rather than coming to work. I think on the one hand, you'd question, is that a person you'd ever want anyway? And then secondly, they could potentially really be shooting themselves in the foot if you don't have a job open for them at the end of July, which I don't really see why you would. There's no requirement to be looking for work either, so you can't really deny the claim either. So in terms of the dates, so in terms of the PPP application, it's from the ability to borrow, which is the date that the bank finally gets their act together, which hopefully will be in the next week to 2 weeks. Until 6/30/2020, you can borrow the money. So the covered period is 8 weeks after you borrow it. I don't know why you wouldn't go ahead and try to be 5/1 or earlier, since that's what all the covered period testing is related to. But I suppose there's a scenario where you might wait. But for this purpose, I really would assume that your last date would be 5/1, but maybe it'll happen earlier. In terms of the forgiveness, it's 60 days after the request the bank is made. So assuming that you're done at 6/30 with your 8 weeks, that'd be 8/31. Hopefully that's truly 60 days. I think I just said 2 months there, but it's truly 60 days, not necessarily 8/31. So you request it, then 60 days later, the bank has to give you a determination of granting it. They're held harmless in terms of making a bad call on the forgiveness. So it's highly unlikely that they're going to be super strict about this, because there's not a huge incentive to be super strict about it. In terms of the test period for forgiveness, meaning how you get the exemption, you have the choice of looking at your FTE count and salary dollars based on the prior period, which is 2/15/2019 or 6/30/2019, or at your election 1/1/2020 through 2/29/2020. So yeah, scenario where you would potentially pick the latter period would be a case where you had a whole bunch more employees last year than you did at the beginning of this year for whatever reason that you did. So you just want your count for the purposes of testing to be a lower number, such that if you're at a lower number, then compared the other way, you're in good shape. So again, regardless, I think you want to probably go with the lower number here until further guidance comes out. In terms of the grace period for rehires, as long as they're on payroll, pretty much as long as they're back on payroll by 6/30 for anybody that you let go between March 27th and April 27th, then you are good to go. So if you had to do some mass layoffs, then you bring them all back 6/30. Anybody that's in that gap period is covered. That means that it's silent on anybody that you let go after 4/27. But I think their thought was that if you took a bunch of money from us, why would you lay people off? The FMLA cover period is 4/1 to 12/31. So that's when the credits start there. Then the employee retention credit, 3/12 to 12/31, first quarter where gross receipts declined or shut down due to the government, meaning the first time that you can prove that, that's when you can go ahead and start using the employee retention credit until it recovers. So in terms of examples, I'm going to go ahead and try to go ahead and bring up my examples. And hopefully, I think a lot of you guys know that I love little spreadsheets. So hopefully everybody can see this or can magnify their screen. But what I want to do is to give some illustrative examples of moves that you could make associated with your specific scenario. So this first scenario is a scenario where you got $3.6 million in sales, and it doesn't really matter. For this purpose, think of this as gross profit. So whether you're a service company or you have materials, it doesn't matter. It's the gross profit number, which is really less cost of materials, but backing out labor if you traditionally have that in your gross profit number. Of $3.6 million or $300,000 a month, payrolls 1.8 million or 150 a month, and you can see the other monthly expenses there that are going to be relevant for our purposes. So also our eligible employee count is 24, and it's on the copies that I made of this, but the eligible employee count for the purpose of our test period, regardless of which one we pick, is 20. So in this scenario, we're going to pretend that we've got 4 people making over $100,000, and I had to keep the math simple, so they're all at 150. And then I've got an average pay of $75,000, so I got to back out the withholding and all that other stuff. When you do that math, assuming that you provide the same benefits that I showed in the preceding example, I swear I didn't just double it, but the math comes out to be the same number. So I've got some exclusion. I've got excess people on payroll, and then I've got the exclusion associated with items that aren't considered payroll. So if I take all of that, which is my payroll less the exclusions multiplied times 2.5, I come up with an available benefit of $333,000 and some change. So if I look at how that's going to play out for me, let's say I've got starting cash of $100,000 in the bank. That could either be starting cash or that could be line of credit proceeds. A lot of people have asked, should I go ahead and max out my line? I think as long as, at some level, you let the bank know what you're doing at some point and you don't use the money for anything silly, then you probably should do that just to be safe. So regardless of how I got it, I've got 100 grand in cash. I've got, let's assume that my collections are going to drop 50% and then slowly restore through the May-June timeframe, and I'm back at full recovery in July. And in this case, this scenario was just a delay, meaning, hey, my year was going to be my year, and all that happened is I felt a slowdown temporarily as my customers slow down, but there's still pent-up demand. So in this case, yeah, this would apply to BGW. It would apply to construction companies that have a pretty healthy backlog and just have had some slowdowns for whatever reason, but otherwise they feel pretty good about things. People that have deferred maintenance, this is probably their scenario. So, it's really where you feel like you're going to get back to where you were. It's just going to be in different quarters than you originally anticipated. So in this scenario, what you could do to potentially conserve cash, but still maximize the amount of credit is, first off, you can go ahead and make salary reductions in terms of, the people that were making over $100,000. I think as long as you message that correctly, you could say, we're going to temporarily reduce your salary to preserve cash, but we'll make it up to you on the other side. This just happens to mathematically be a reduction. And remember, it's not taking them below 100 grand. It's just excluding out the amount that was in excess of the 100 grand. So it's not even counted for the purposes of the 75% test. The law is not, doesn't have any opinion on accrual-based accounting versus cash-based accounting. All it says is, hey, we may ask you to see copies of canceled checks and the like. So let's say that you got a rent abatement, or you just, whether you got the abatement or not, you decided to do it. That could be a source of cash, a slowdown in paying your accounts payable. And then pretty much most banks out there are granting at least a 3-month abatement. The law encourages them to do a 6-month, like is available for regular SBA loans. So if you have an SBA loan already out there, you should be looking to defer that. The law says it's 6 months, I believe, and then most lenders will grant relief on things that are not SBA related. So I was looking at a negative $81,000 cash flow, but by my cuts, I was able to reduce that down to a $21,000 cash flow. So I did dip into my cash a little bit. So if you roll that forward, in May, I get my PPP money, $333,000. I pay my rent back from April. So guess what? It's included in my calculation now. I keep the debt abatement running just to preserve cash just in case. So now I'm back to slightly, I'm getting close to cash flow positive. So I keep on trucking with this model, and into June, my 8 weeks is up. So in July, I make the employees whole again. I pay off those payables that I've been accumulating. I go ahead and pay the debt back that I abated, unless for some reason you wanted to carry it forward and tack it onto the backside of your loans, which would be the default. In this case, I just assume that we pay it back. as you can see, as I play this out, I'm actually in pretty good shape. So if you look at column L, that's what the year would have looked like had there not been a crisis. But in this scenario, I fully maximized my PPP money, and I effectively got a tax-free benefit of $333,000 to do something with, absent further guidance saying that that's going to be negative for me. When it comes down to the certification of was I really harmed during the period, well, considering that I'm requesting at the end of June, I don't actually know what's going to happen in July. I might have a hunch, but I don't actually know anything. So, none of us know anything at this point. So it's hard to say that we won't be harmed. We've just got some guesses. So I don't see a lot of risk here associated with this scenario, other than at some point in the future, they might audit this and try to prove economic damages, in which case this would become taxable income, but it'd still be a positive benefit. So in terms of the second scenario, which I think is fairly common, you've got people that have, same scenario, same company, but sales are gone, period. Like, I'm just not going to get sales back for April, May, and June, but I do have a full recovery starting in July. In this case, what you could do is, you got the salary reductions already out of the gate in terms of the amounts that are in excess of the $100,000 limitation. In addition to that, if you took it down to the 75% number, you could effectively double that reduction and be fine still. And it would really be up to you in terms of whether or not you said that that was a permanent reduction or it's something that could be recovered at some point in the future. That's going to be a case-by-case basis about how you feel about that and how the employees feel about that. But an extremely common scenario would be, this is going to happen anyway if this is a sales commission-based organization, because by default, commissions are going to be reduced. And it's going to be up to you to determine what, if anything, you want to pay against that. What you could also do is put people on a part-time basis to allow them to maximize their unemployment benefits. I'll get to a tax credit example later that shows you how you might use a combination of unemployment and tax credit. Because the only downside in using the unemployment specifically without paying something is that you don't. I think my fear is in terms of how that's messaged. How are you going to get the employee back when you're ready to have them trucking again? So I would consider using a combination, or paying them something at least to still get them engaged. You've got the rent deferral still, the expenses, and the debt abatement. In this case, I did not pay the debt abatement back, but I did pay back the rent because the landlord was going to kick us out, and I did pay back the AP because the vendors were going to cut us off. And then same PPP eligibility, because remember, it's based off history, not the present. In this case, you're still going to qualify. It looks like I have a little error there up in my formula. You're still going to qualify for the full amount of PPP, but in this case, you effectively broke even. So you were able to use the PPP money to finance the downturn and otherwise keep your team relatively whole and intact by maximizing the use of unemployment and salary reductions. So, granted, some people may feel like they weren't made whole because they had a salary reduction, but at the same time, yay, we made it through. And again, this would be really appropriate for a commission environment. I think this would also really apply to a restaurant environment as well, where I've got a skeleton crew now, and I'm looking at what to do in terms of bringing people back. You might not have as many highly compensated people, but it could be that your kitchen manager and your general manager, assistant manager end up being above the excess amount when you look at it. So I think this scenario is appropriate for, I think, a lot of our clients to look at in terms of the right combination of maximizing the benefits that are available. In the last scenario, this is the, hey, I just don't freaking know what's going to happen, and I'm betting on my new normal is going to be less than what it was. And my recovery might be a full recovery. I don't know, but it's sure as heck going to be longer than the end of this calendar year. In this case, you're going to need to get a little bit more draconian I think in terms of it, this is again, assuming that you still want to wind up with a reasonable profit number while minimizing, while minimizing the reduction in your cash balance. Oh, let me bring this back again. Sorry about that, guys. Which in this scenario, the full model lays out to $57,000 reduction in cash, but you still made a pretty decent profit. So you didn't break even, but you didn't go too far in the hole. In this scenario, what I've modeled out is I've done the same permanent salary reductions for people that still give me the full amount of the credit. I've also laid off some additional people right here that I knew was going to happen. I've got some use of unemployment by converting people over to part-time. Still have the same rent deferral, still have the same debt abatement numbers in here. But at some point, I need to adjust to my new normal, which here, what we're doing is we're reducing labor rates back to where they're in line with what they were up here relative to sales. So it's just basically saying, look, if my new normal is I can expect 225 a month, as unfortunate this is basically reducing headcount to meet the sales number, or alternatively reducing the wage base to meet the sales number in order to keep the profit, the overall net income number intact. I'm just showing numbers here. I'm not speaking to how this would feel emotionally. So it's really going to be up to you in terms of how you would handle this relative to your belief in the future, in that, would I need these people back at some point in the future because they really are productive in adding to the team, versus, hey, I really need to be in cash preservation mode because, theoretically, you could use potentially some EDL money at this point to keep the team intact without having to make the reductions and let EDL finance you, since it's being used for some of the same purposes. You could either apply for the loan here, or you could get the loan back here in April. Just make sure you're not commingling funds during the cover period between the two. I don't know how you prove that, but let's assume that you can. And then use it maybe to clear out these things like your past accounts payable. That would be if you wanted to keep the team intact and you're okay going further into debt to do so because you believe that the future is going to be more rosy than this being a permanent situation. If on the other hand, you're a little bit more risk averse and just want to wait and see, then these are the kind of moves that you'd want to make to preserve your company. In terms of, when would it be appropriate to take the tax credit? There is going to be some rulemaking around, hey, how can this be used with the tax, with the unemployment taxes or unemployment benefit that's available. But assuming that it is, you are going to be reduced by the amount of tax credit that you get. So, let's assume that I've got my normal wage, $75,000 a year, $6,250 a month. My unemployment value is $48,000 or $4,000, assuming I'm getting the full benefit. The question is, could I either keep them part-time and just pay them $2,250 to keep them whole, in which case that would be included in my calculation of what my number is, or if they've requested leave, it's $2,250 to keep them whole. If they're actually just sitting at home, but I want to get the credit, it's going to reduce your PPP by $5,620. However, if those other expenses, and I think this really would apply to any scenario where you have lower labor relative to, say, a services company. So, this again would be, construction company, manufacturing, could be restaurants where you've got pretty decent size rents, pretty decent size utilities. And since those are includable, you may be able to reduce the wage expense, keep people employed, and then, still come out in the positive, even though you're utilizing unemployment insurance to augment all this. So, this is going to be a case-by-case basis in terms of where this makes sense, but I definitely think there's scenarios where you can go ahead and remove the amount that would be excludable for forgiveness because it's made up for based on the excess that you got sitting out there. As long as you follow the other rules that are in place. So that's just a little bit about, it's not as easy as, hey, let me let everybody go tomorrow, let them file for unemployment, and then I'll bring them back, because there are other strategies that you can do to mitigate this in terms of using a combination of reduced pay plus unemployment that keeps people economically whole and still allows you to maximize the credit. So I'm going to switch back to presentation. Oh, sorry guys. All right. So, considerations, for you for next steps, really, which scenario are you, and model it out. If you're an S corporation owner, you really just need to do the math on what to bring yourself back at to maximize credit versus do you need to do an after the fact payroll as well. I think the other thing that's going to be pretty difficult is, evaluating, just fully laying people off versus the morale and cultural impact of that. There's also potentially some negative impact to the length of time they could collect unemployment benefits based on when they were actually laid off. So it just, especially if the declines aren't permanent, I just think that would be a hard thing to look somebody in the eye that, hey, we laid you off, but we think the year is going to land the same, but we're going to have you work overtime to make that happen. By the way, you're an exempt employee, but you don't get overtime. So I'd really think that through carefully before making the decision on that. And I know a lot of people are out there are advising people to go ahead and do layoffs now. I don't think it's really that easy until you run through this type of decision until you run through this type of math to predict what you believe your future is going to hold. So the use of EATL as a supplement, if the new normal is still temporary, I would consider that. You are technically taking on some more debt, but if you really are trying to keep the team together and you believe that the future of keeping the team together offsets the debt, I definitely would be thinking about this route. The other thing that I really would consider using it for is, to the extent that, hey, all this crap happened and you've got pretty decent receivables, and at the same time your payables are at a pretty decent balance, that is a usable component, as is any debt service that you have that was not abated, or conceivably you could go back and use it to pay the abated debt and have longer term financing. You can't use it as a refinancing source, but you can use it to pay off debt and these other qualified expenses. So that's all kind of the hard decisions. I think on the going back to the Bain model, in kind of the week 5 or week 6 area, on the positive side, you really can use this as an opportunity to make your business better or do some transformative changes that you might have been considering, but for whatever reason, you hadn't pulled the trigger on. If I just use myself as an example, I'd always wondered if I could do this job from the Caribbean, and I believe that I can. So Tim Campbell, if you're on the call, then I would appreciate the use of your place in St. John, and you're welcome to use my boat when I finally buy it. So I really do think, in all reality, if you look at BGW as an example, we do burn a lot of time in travel time that I've always questioned, was it necessary or not? So as long as we're maintaining social interaction with you guys, so far nobody's complained. I would like to give some hugs out, but nobody's complained so far. So I think it does show that you can work this way if you're really looking to push it. At the same time, if you have a backlog of things that you really were looking to fix, it's an opportunity to fix them instead of just having people at home twiddling their thumbs. So those are the considerations that you ought to make in terms of thinking strategically about, in this gap period, what would I want to change about my business to make it better on the recovery side. So with that in mind, that was the content that I have, and hopefully that was helpful. I know that's a lot of information. One thing that I'd close with is that in terms of, before we get to questions, in terms of how BGW can help you guys, we have had a lot of requests. And those requests really fall into two categories. One is really questions, and the other is around direct assistance as we're going to start going through the application process. What I'd say about that is, obviously it's going to take a lot of work, both on your part and our part, depending on the nature of what you're asking. If it's generally a question, don't worry about asking it. We're going to get to it. We're not going to really send you an invoice for that, because y'all know that our general policy is that we don't send random bills for questions and telephone calls. So, that just figured that that's going to be the case. On the other hand, when it does fall into, hey, could you make this kind of a turnkey application process? That is going to take a lot more work on our part, other than just asking, having questions asked. So I guess, I think our position would be, hey, we want, your success is really going to drive a lot of our success. So I think our billing philosophy on that is going to be pretty similar to how we bill for tax audits, which is, this sucks. I don't like that you're going through it. I don't like that I'm having to do it. It's going to take a lot of work, but at the same time, you didn't ask for it. You got thrown into it. So I think generally, we want to help. We would like to get compensated at some point for that. That's fair on the backside, but not to the point where it's very gougy. So just, if you need some help, just talk to whoever your contact person is at BGW, and you guys make a decision on how much involvement you want from us. And my commitment to everybody is that we want to help everybody that wants to get help, and we're going to help everybody that needs help, that asks for it. And at the same time, all I ask is, hey, let's treat each other fairly at the end of it, because we don't really know what it's going to take at this point. But our commitment is to be fair with you guys. So that in mind, thank you, Gary. I'm going to turn it over to you and open it up for questions.
Cool. We've got a ton of them. And so I'm going to start with ones that came in earlier, kind of first in, first out. And just because there's so many of them, if you say, hey, I already covered that, then that's cool. You just say covered it, and then we'll move on. All right.
Right.
So first one was, why is government saying you can use SBA 7A forgivable loan for payroll, rent, mortgage, interest, healthcare, and utilities for an 8-week period when they are only offering a loan in the amount of 1 month average times 2.5? In actuality, if you keep payroll unchanged, all they're really offering is 2 months of payroll versus having you pay your employees unemployment plus a half a month to cover.
Yeah, I didn't write the law, and I didn't cover it. So we're stuck with what we're stuck with, and I can't speak. I wish it was the 4 times it was in the Senate bill, frankly, because that was way better.
Yeah, I agree. We've heard that you can apply for disaster loan, the EIDL, and also get PPP. It seems like you can roll them together. And you had said that if you roll them together, the loan is the loan forgiven. Seems too good to be true. If the whole loan is not forgiven, then why would you replace 30-year loan with a 10-year loan?
Good question. I don't know why you would, but remember, it's not guaranteed that you get 30 years. It's based on the SBA's determination of ability to repay. So, I might really consider doing the 10-year if I got a feeling that the SBA was going to say, you're doing fine, dude. You can get that paid back in a couple of years. So at least you've locked in 10 years. So it's really going to be a hedge or a bet on what the SBA said, because they said it's a max of 30 years, but it's based on your ability to repay.
Cool. Let's see. Next one is, this one went in earlier with respects to payroll protection program. One issue I'm seeing for us is the vast majority of my compensation is, as a business owner, is from distributions rather than payroll. I know it's still early in the days of understanding, but curious if you have any guidance and suggestions on that. Could I pay myself a large lump sum of payroll in the month before applying for the PPP loan? I imagine a number of other S corporation owners are facing a similar situation.
Remember, it's an average of the preceding 12-month period, so the lump sum will presumably get smoothed out, and it's all capped at 100 grand anyway. So you just would want to evaluate your specific circumstances to see what you need to get to maximize the 100 grand.
I'm also wondering if there are any limitations on health insurance premiums that the business pays for the owner of the S Corp. Example is the owner's premium amount, which gets reported on the W-2, allowable in the calculation, or is it just amount paid for employees' premiums?
Well, there's no guidance on that yet, but presumably it's whatever your plan dictates. So in a solo S corporation, we typically would say, hey, you need to have like a fully reimbursable plan. So as it reads now, the whole thing would be allowable until we receive different guidance.
Right, and I think you've covered this one, but I'll read it anyway. See, the exempted or the excluded payroll cost is any individual with annual salary of $100,000 or more. What if hourly employees are not on salary but earn more than $100,000 per year? They also exempt.
Yeah, it's anybody that makes over $100,000 defined specifically in the definition of payroll, which was in the example, regardless of whether hourly or salary.
So it's just anything that's over the $100,000 it gets lopped off.
Yeah, and you know, somebody's probably gonna ask the question, do commissions count? Yeah, they do.
Yeah. All right. If our small business has already been forced to furlough or lay off workers due to COVID, what's the window for which we're required to hire those in order to be eligible for loan forgiveness under PPP?
We hit that, so they got to be back. There may be further guidance, but as of today, they got to be back by 6:30. So what you'd have to evaluate is, you know, you need to, at the end of the day, pay out the maximum amount that could have been forgiven, unless you want to turn it into 10-year term debt at the very end of it. So yeah, I think that'll drive the decision of when you bring people back is when will you have fully taken advantage of the forgiveness component.
The next one is if we do hourly.
Let me back up a second, Gary. I think that's going to be pretty relevant for the scenario number 3, where you're trying to use a combination of unemployment benefits plus what you're paying people to fully maximize PPP to get the full benefit, get your people as whole as you possibly can without shooting yourself in the foot or sticking yourself in a hole.
Perfect. If we do rehire hourly workers or staff that are paid when they perform services like personal trainers, group fitness instructors, et cetera, how do we determine how much we're supposed to pay those individuals if we need to rehire them before we're allowed to reopen our business?
Hey, Gary, I'm going to stop share, so hopefully this can screw us up, but people will be able to see our faces. In that case, I think that's going to be a case-by-case determination based on what your cash flow forecast yields. Likely at a minimum, you know, if you're not supplementing with unemployment, they probably ought to be at minimum wage, but otherwise you'd fall back to what they'd historically made or something less than that based on what your cash flow projection yielded based on your most likely expectation of resumption of opening. I know it's all best guesses, and I wish that it was more clear in terms of where everything was going to get better. But I mean, as a restaurant, as an example, it's pretty clear you're shut, at least in North Carolina. So what you've got available is the ability to do takeout, which is going to be somewhat limited. So in that case, you're going to be looking at your test period relative to what are you bringing in now at the reduced payroll level and bring people back to fully maximize what's going to be forgivable.
And this is a gym, it looks like. So that's even, you know, they don't really even have takeout necessarily available there. But if the business is mandated to stay closed, how do I calculate a wage for an hourly worker with no hours to work?
It's whatever you determine it to be, which would fall back to minimum wage, conceivably, times a number of hours that gets them to what they would have made when used potentially with the combination of unemployment until such time as you get them on the payroll protection program. So I would go back to what have they historically made?
Great. We've had a couple questions that have come in. Can we share the spreadsheet that you shared as well as PowerPoint? And my response is, yeah, we'll get those things hung up on the website. Give us 24 hours unless you disagree. You have a problem sharing that spreadsheet?
No, fire it up. Someone smarter than me needs to check it for math errors, please. If Jerry's on the line, that would be a request to you, Jerry.
Okay. Which SBA forgivable product is best suited for very small businesses? How will, so that's the first one. And then how will taking an EIDL loan grant affect our S Corp situation?
For small businesses, assuming that you have payroll, PPP is going to be your route. Small businesses that don't have payroll, EIDL is going to be your route. And if it's really, really bad, it's going to be a long time for recovery. You might consider using both depending on how much risk or debt that you want to take on. I can't, other than the wage question, which we've already addressed, I don't think there's a scenario where it's going to mess up your S corporation in any way or negatively harm it.
Next question, will the SBA loan or grant cover our contractors that we 1099?
Yeah, so what's going to be interesting is the guidance that they provide around how are you supposed to calculate the wage component, because you're paying them a gross number. So one would assume that you would impute an effective tax rate on them to get to a more traditional net number as if the person was an employee, but right now they're includable, same limitation, $100,000. Now, when people, some people have asked for 1099s, or talk of 1099s as part of the evidence of what you both paid and what you ultimately are asking for forgiveness. Remember, that doesn't apply to everybody that receives a 1099. It's really meant to apply to people, meaning like we get a lot of 1099s as a service business. Your landlord gets 1099. It's really only meant to apply to people who are acting like employees, not in the sense of are they an employee, but you guys get the point.
Can we let some of our employees take on employment and keep others and still qualify?
Yeah, as long as you meet the exception waiver test that I outlined. But even then, even if you have some that's excluded from forgiveness, as long as the other expenses offset it, until they have further guidance. So for example, if you have a reduction in the payroll number, because it defines payroll pretty specifically, in terms of when you got to get the headcount back and how much the payroll component's reduced, but you have other expenses, then one would assume that, hey, you might still maximize the full amount.
Can we pay some of these employees that are left and still more than we've paid in the past? And can we pay officers in the corporation with the grant?
You're still limited to the $100,000 number. So I don't know, other than if you were really trying to make sure that nobody that was making a lot had any type of disruption at all. Unless you're willing to finance it from a cash flow perspective, I don't see a really good reason to pay anybody more than that if you don't have perfect certainty of what's going to happen. So with that in mind, I probably would not exceed that number. In terms of raises, it's silent on raises at this point. So the only thing it talks about is anybody's compensation being cut or the FTE count. So in theory, as long as the FTE count's there and the compensation dollars match up, then you'd be fine to do it. So
I think you addressed this, and the question was, what do you know about the additional $600 a week federal unemployment stimulus through 7/31, and the fact that many hourly employee or workers will do better to take the unemployment than continue to be employed? But I think we pretty much covered that, right?
Yeah. Yep.
All right, next one. We talked about what the exact period of time we need to calculate average monthly payroll. Will it go on cash basis? If so, we have 5 Fridays, and one of those baselines months will it be a bigger number?
So yeah, in theory, because the calculation is supposed to be done off of your payroll tax filing. So that just shows by month. You know, I also will confess that I have not actually looked at a payroll tax return in a long time, but I'm pretty sure it has wages by month on it. So whether it was five, you know, more, whether it was more than the average bear in terms of payroll runs or not, doesn't matter for this purpose. Pending for the guidance.
Then we talked about the line items that count for forgiveness. We've addressed that. And then since they use 10 weeks to calculate the loan amount, but we only have 8 weeks to spend it, what do we do to max it out? Hire temps, pay bonuses?
I think when you model it out, you'll end up using it to cover negative cash flow, because even though it's calculated off of payroll at a reduced amount, remember it also includes rent and utilities. So, you know, for a lot of people, the facilities costs alone are going to be anywhere between, you know, probably 4% and maybe 10% of sales. So that's a big slug that offsets the reduction just, you know, right there. So I would think that you would not have to work too hard to actually get the full benefit without having to worry about independent contractors or raises when you model out your numbers.
I think you addressed this one too, but you might just want to clarify again. How do distributions to the owner of an S Corp work in terms of calculating loan amount and calculating the forgiveness amount?
It goes back to the wage. You know, you got to calculate what's going to be the wage that you're going to set yourself at.
Deferral of employer share of Social Security. What's the mechanism for not paying our employer 6.2% Social Security this week?
So you can just do it. The downside is that it has to be paid current if you take PPP funds. So it would only be temporary in nature, because it would ultimately have to get, the way it reads now, it would have to get repaid if you took PPP funds, because your payroll tax deposits have to be current. Now, you know, don't ask me why they excluded them from the definition of payroll and then you have to pay them. I don't know. I wish that I knew what someone was thinking when they wrote that. What I would probably do if I were you and you were looking to use that as a source of funding, I'd evaluate the use of the credit and how that might impact me relative to PPP, you know, as one option for not paying. And then the second would be, maybe I just accept the fact that there's going to be a penalty and interest at the end of all this that I request relief from. But understand, if you take PPP, it's ultimately got to be paid. If you don't take PPP, then you would just, I'm assuming, notify your payroll provider to say you're not paying it and plan on paying it at some point in the future.
And then this question followed it is, if we qualify for PPP, are we not allowed to participate in this at all? What if we've started it and it takes 60 days before we get our PPP funds? Do we have to pay back our Social Security taxes immediately, or are we not allowed to participate in this 8 week during the 8 week period of time that we use PPP for it?
It's really silent on the cure time frame. So I would probably plan on getting it caught up at least by the time of the tax return filing, if you have the ability to do that, or at least seeing if you can enter into an installment agreement so that you've shown best efforts to do something other than putting it off until, I think it's 2021, that you can get it paid.
How's the best way to determine total amount of loan forgiveness? We kind of covered that, right?
Yeah, those spreadsheets.
Yeah. How do we include benefits that's in spreadsheets? Understand that there's a reduced loan forgiveness if your average FTE is less in 2020 than it is in 2019.
That is incorrect. Well, not all the way correct. At the election of the borrower, you can actually use January through February 2020 as your count for the purposes of testing for FTEs. So you're going to want to look at that and see what's going to be more beneficial to you.
They did ask a question about how part-time contractors are, if they're excluded or if they're figured into the FTE calculation.
There's going back to the slide earlier, there's not any guidance on how you determine what's an average FTE. So I just used the ACA guidelines or ACA calculation as an example. I would assume they're going to come out with something at some point.
Any sort of assistance that landlords can get if the tenants are unable to pay rent?
So a couple things depending on the nature of uh, who you are. So one is obviously you can apply for the EDA loan. Secondly, if it's multifamily or even single family and it's FHA backed, then I believe there is a moratorium of I think a year not having to make payments. And then lastly, most of the banks have defaulted back to at least granting you 3 months. I think some landlords are asking for, hey, what are your plans to get me whole? And I think if I was a landlord in that position, I would want to know that if someone received PPP funds, knowing that it was going to be free money, that if I'm going to grant an abatement, it would be conditional upon me getting repaid upon receipt of funds. Because that'd be pretty crappy to ask for rent abatement. Someone's nice and grants it to you, and then you get money that supposedly is going to get forgiven, and you say, "Oh no, going to use that for other purposes."
Yeah, that's a great point. And for the direct pay checks that they're using from using our AGI from 2018, or will they wait for 2019 taxes to be filed?
I think the way that it reads now is that if you have not filed your 2019, it's 2018. If you didn't file your 2018, it's going to be what they have on file.
Okay.
Which I think their intent would be people that didn't have an obligation to file an income tax return. They're just trying to verify that they actually had income per se, meaning Social Security benefits that were in excess of the limitations.
Okay. So we've been profitable in January and February. March should be up to or at least flat. We've got enough work without additional orders to break even now in 2020. We've got a diversified account base, including food sector, manufacturing, and power generation that'll have us working as critical infrastructure industries. We have annual programs where we assess building exteriors and develop reports with 5-year projections to protect the asset when it's time to sell. This type of work is construction, but it's really not C2 work, at least in spirit. We want to push as much of this off as possible to keep our people in home as much as possible. This would mean that there would not be enough work and people would be laid off. Do we qualify for the PPP?
Yeah, I think again that ultimately you would go back to the example scenarios of when you anticipate recovery and what that recovery is going to look like for you to determine when you take it and then start paying them again. And again, that goes back to the balance between laying them off, allowing them to collect unemployment, and what that means psychologically to the person that you laid off. I mean, mathematically, I'm not going to sugarcoat it. Every time it makes sense to lay somebody off, let them collect $48,000 over the equivalent of that over whatever it is, 13 weeks, and then take the PPP money, bring them back at some point. But I think at some point you have to evaluate that versus what does that actually do to morale, especially if you're going to get fairly enriched by it because your year is going to land the same anyway. So in that scenario, if I was pretty confident as to what my backlog looked like, I don't think there's a downside in taking the PPP funding and having it be fully forgiven, other than that potential window of, hey, this is really, really bad. The increased unemployment benefit has expired because it expires in July. And then all of a sudden you're out of funding. I think in that scenario, I really got to believe there's going to be stimulus round 4 because it means that it was beyond everyone's expectations in the very beginning in terms of when we start recovering. So you could model it out, but I feel like that's pretty doomsday, and you'd have to balance that against the likelihood of no stimulus and employee morale and culture versus taking PPP funds balancing that against unemployment to try to make it last while still keeping somebody actively engaged by paying them a little bit. And then, hey, if things really are still crappy in July or June, then you make a decision then.
This is a timing question. Is it best to wait to apply for a while so your time clock of using the funds is closer to the time of reopening, or does the time start when you fund it, and can you wait till to fund it after the approval, or does it have to happen simultaneously?
Yeah, this is related to PPP, since that's a forgivable component. It's going to be up to the banks on how they do it. So I think you got to operate under the assumption that it's going to be, 2 weeks maybe at best. Maybe it's next week, but probably 2 weeks at best. Probably May. I mean, by law, they had to do rulemaking in 15 days. So March 27th plus 15 days is whatever date. That's already a couple weeks, into April before people figured out. So I just feel like you're really only debating 2 weeks in reality anyway, for this purpose. So it's going to be up to whatever your cash flow projection tells you.
Somebody was wondering if we could do PPP and EIDL together, and the answer is yes, right?
Yeah, as long as you don't double dip.
Payroll costs. On payroll costs that you went over in the Q&A last night on your video, which if you haven't been checking those things out, go to our YouTube channel. It's BGW CPA YouTube. And he's been doing explainer videos pretty much on a daily basis that are really helpful. But this is referencing the last one that you did last night. Was that definition pertinent to the 12-month calculation or to the forgiveness period calculation, or both?
Oh, that would imply that I remember what I actually said last night. I think it was for both, because payroll is defined as very specifically how it's defined in this presentation. And the part that references the forgiveness piece references the preceding section. So presumably, that definition determines the loan amount, and that definition also determines the amount of forgiveness associated with those related expenses.
Let's see. We've covered the $100,000 cap related to payroll calculation. With respect to the disaster relief loan, does this have to be paid back? How does all of this work? So I think you've covered that. Anything you'd add to that?
Yeah.
Let's see. Okay, we were on the webinar a week ago. It was with NC Chamber of Commerce, and they suggested that you put the amount you want and justification in the comment section in the application for EIDL. I'm thinking we estimate lost gross margin for the remainder of 2020 due to the pandemic, correct?
So a couple things on that. First off, with the new application that's out there, and again, to remind everybody, if you already filled out an application, the SBA has recommended that you refill it out so that you get the grant money. We don't need it tomorrow. So I was planning on waiting for BGW until we find out a little bit more about PPP, but if you need it, go ahead and think about applying for it now. There's not really any downside. People are worried about it running out. I don't see that really happening, because I think that section actually only deals with the appropriation of the $10,000 grants. And it also has some references to unlimited funding available, since they believe it's going to be paid back. So I wouldn't, and ultimately would roll into PPP anyway, assuming that you got both. So with that said, I did play around with the application, got all the way through it, but did not resubmit it. And I don't recall seeing a place where you could estimate damages. In the new application, all you do is put in your revenue and then your expenses, and then something happens. I don't recall seeing a comments field, but I could be mistaken. So the old application, I think you could have put something in the comments, but the new application, I don't think that's available.
Okay, great. So this is a shout out actually to Patty up in our Hendersonville office, but it's got a very specific question. So the scenario is this: my wife and I run a small vacation rental property management business. We're a 2-member LLC. 2019 was the first real year of business and filing taxes as an S Corp. We have no other employees. And he's been super helpful in getting us set up and sorted out, but much of the accounting side of things is a foreign language to me. My question is, since his wife and I have no income during this time due to all the reservations being canceled, do we qualify for an unemployment compensation through this relief package?
Yeah, there's no
Payroll in 2019.
Yeah, so I mean, in this scenario, you could probably figure out a way to use a combination of PPP money and unemployment money, but pretty much all the restrictions on unemployment went out the window, such that it's pretty much everybody that is part-time, self-employed, single owner, S corporation, like all the stuff that would not have normally qualified, now qualifies.
Okay. Same sort of question. We own a beach house that we rent out for short-term weekly rentals during summer months. We'll likely lose some, if not all, of the typical $30,000 a month in rental income. How does the CARE Act apply to that?
In that case, unless that was your only means of income, you're probably not going to have an employment play on that one, if you otherwise have a full-time day job. But that's one where you're not going to get forgiven money, but you could apply for an EIDL loan to cover the expenses that you're otherwise having to pay during the course of it being down. In that case, what I might consider doing is a combination of rent abatement and then to preserve cash today, and then EIDL loan to then get rent abatement, mortgage payment abatement, and then get the mortgage caught back up. And then you've got a longer term financing play for that money and the expenses that you covered while it was down.
All right, so my wife's incorporated business is in a beauty shop and aesthetic services. Salons closed, therefore lost revenues for the months will never be recovered. Should we apply for the loan using 2.5 calculation per the video for herself, one employee for lost payroll, rent, and utilities? Can telephone and accounting fees be calculated in utility costs?
As much as I'd like, probably not the accounting fees, but outside of that, you have the correct, well, remember, it's the payroll cost times 2.5, but then you can use it for those same costs plus rent and utilities.
Using the calculation for the 8 weeks, would I apply just for the loan, just the loan forgiveness amount or more? And if so, does the loan forgiveness amount need to be at least 90% of payroll, rent, and utilities?
So the loan forgiveness amount can be up to the principal balance. So whatever you borrow, that's the max that can be forgiven, as long as you prove that you spent it on the covered costs, which again are payroll costs, rent, and utilities, subject to the same exceptions we talked about, meaning you laid off a bunch of people relative to the test periods, or you really reduce salaries relative to the test periods.
It's interesting. So this person said, I've applied for NC unemployment, but both computer site and phone site are down to certify for the week. Any suggestions with that issue?
I wish. I don't know. That's awful.
Yeah. Let's see. My question about the CARES Act is, when a company acquires the SBA loan and part of the loan is forgiven, is that going to be taxable?
No.
No.
No. Shout out to Tom. No, it's not. I knew I asked that question.
Yeah, you did. Good one. Let's see. Would love to see calculation of limits, loan forgiveness based on head count. I think many will try to get loans, then find out that some head count or salary reductions will mean that all is not forgiven.
Yeah, I mean, I think that's really the purpose of making the original amount from the spreadsheets to know what's available versus what you're actually going to have to do to make it through. That's going to give you kind of what's left. If we're speaking in 1031 language, what's going to be your boot, meaning what's the amount of debt that's going to be left at the end of it.
So this one is, when will banks be up to speed and ready to process loans for Paycheck Protection Program?
It really, from we're talking to them every single day, obviously, and most of them right now are at the on big SBA conference calls about the program, and then internal calls about how are we actually going to implement this, and then making decisions around, if we weren't in the SBA lending business, how do we get in it? And are we going to take on new customers or not? So I really think it's going to be leading edge, best case, tail end of this week. My likely feeling is best case, leading edge, meaning banks really on top of stuff, uh, probably middle of next week. But I think you need to be planning for probably two to 3 weeks from now that they'll be ready to really begin processing. Now, I would suspect that, starting next week or the week after, your banking relationship will be reaching out to you saying, here's the stuff that I need in order to process your loan. And I know a lot of banks, we've seen some information from PNC as an example, are already in the process of letting people know what they're probably going to need so they can start pulling it together.
I think that's actually a good point. And the one thing that we have seen, and we've got great relationships with a lot of different banks and commercial lenders, but PNC put together a very thorough kind of a checklist on, this is the stuff that you need to be gathering right now while they're getting their act together. And I think what we could do is we could probably put that up as a document on our website, because I thought that was really helpful for business owners. So we'll make a note to do that, Rachel. Also, if you have time, can we address what owners of real estate, rental real estate can or should be doing, since PPP does not help them directly, like get their tenants to get PPP and or go back to their lenders for deferment. And I think we talked about some of that, but getting their tenants to get PPP. Also, for realtors, can you address how their agents who are independent contractors or self-employed can use PPP?
Yeah, I mean, real estate agents can use it the same way that any other business can. So in North Carolina, there's a waiting period before you can actually become a corporation. So you are a 1099 for a period of time. So that's covered, as is the corporation itself. It's treated just like any other business. And I think we covered off on the EDL with respect, and PPP with respect to commercial leases.
Yeah. Question is around owner's compensation. If your business takes any of the available loan options in the CARES Act, how does it impact owners' salaries and distributions while the loan is in place?
So there's some other areas where it discusses distributions to owners, not specific to this act. So I just would be super, super careful about that during this time period, to the extent that you can. I mean, technically, if you still made a profit during the time period under question, which is through 6/30, in theory, that is distributable cash that would be made available to you, knowing that there's going to be forgiveness. I just would be real careful about that, such that, I guess I would be concerned about at some point they do some sort of cash tracing to say, hey, where'd the money go? And assuming, you have proven that for loan forgiveness, it shouldn't matter what you distributed to yourself. I just would be careful.
How do you determine which of the two loans between PPP and EIDL is better for small businesses with 25 or less employees, and how soon should you apply?
The answer is both. You're going to want to maximize the loan forgiveness and use EDL to augment anything else that it doesn't cover. Or if you ran out of PPP money, but you still want to keep the band together, you could kick in EDL, because EDL is available through the end of the calendar year.
And the last question on that one is, do you apply online or secure the forms through your bank?
Right now it's online, and the website got a whole lot better. For EDL, there is a point where the SBA could designate banks to have the ability to lend, which would make sense since they can refinance it. So that could be coming, but right now it's the SBA. For EDL, it's going to be banks for PPP.
This is a gym owner I was forced to shut down due to the virus. Am I able to file for unemployment? If so, do I have anything special since I'm self-employed, and will this cause any problems for 2021 tax season?
No, other than, absent something else, it's considered taxable compensation, but so just keep that in the back of your mind. But otherwise, you're qualified for the same benefit anybody else does, which is whatever North Carolina would give you plus $600 a week until July 31st.
And you might just want to clarify on this because I think you covered it, but if we're not up to 100% of the numbers of employees and payroll by June, will there be loan forgiveness applied proportionally? For example, if we had 18 employees last spring and we have 12 in June, will we be allowed 60%, some formula of forgiveness?
Yeah, it's just a math problem. So you are correct. It's just, basically, FTE numerator, FTE denominator, applied times the amount that you're asking for forgiveness. Same thing on the salary reduction side of things. So I think barring further guidance from the SBA, I really would be banking on, hey, let me plan on maximizing loan forgiveness, even if it meant that I restore. I mean, it's kind of shady, I guess, but you could, I guess, in theory, restore people, 1 minute before the clock strikes midnight to get back your FTE count to maximize the loan forgiveness amount, remembering that you still have to pay out all the money ultimately for qualified stuff, because you want to try to get the whole principal forgiven, so you need to actually spend it unless you want to convert it into a loan. But then you could, in theory, let them go at 12:01 July 1st, because currently it's silent on what happens after June 30th in terms of what you do with the employees.
Can you tell me if we can still pay our part-time staff who are not currently working under federal stimulus bill just passed?
Yes.
Direct Pay told me that they believe all employees who are currently furloughed are eligible and that they're establishing a special payroll code for these hours. Just want to make sure that I tell these employees that they will still receive their normal pay during this period of time.
Yeah, I assume that question is relative to the FMLA credits and the employee retention credit, which I know the payroll companies were gearing up for. In addition to that, I suppose this would be a good tracking mechanism for you, but I don't know if there's a difference between that and just paying them straight up for the purposes of establishing what you paid for PPP. So I would assume that the payroll companies are making the changes so you can track internally, but definitely they made changes for the purpose of calculating the credits if that's the route that you end up going.
Next question, is there anything available for a 1099 workforce? I think we talked about that.
Yep.
Let's see, can you ask to clarify what exactly you mean by doubling up on EDL and PPP?
Yeah, so let's, the section that it talks about doubling up really applies, really what they were focused on in that section is, let's say that I go to bank A and bank B at the same time. I can't have two applications. I'm not supposed to have two applications pending at the same time. And I'm not supposed to, let's say that bank A makes the decision on Tuesday and I accept funds, and bank B makes the decision on Wednesday and accept funds. In that case, I've double dipped. Now I'm only going to be forgiven what I paid, but I've effectively double dipped. And I'm just going to be stuck with a big long-term loan at the end. Part of the certification process is that I'm supposed to say, look, I don't have a request pending for the same type of funding for the same cost. So when that comes to EDL, that really has two things that you have to consider. One is if you've already made the request and then you get it, when you get PPP funds, what you're going to have to let's say you get $2 million, and clearly that was meant to cover payroll and all that stuff when you made the original request, and you get it. You apply for PPP, you find out your forgivable amount is going to be $1 million. So now I have $3 million at my disposal, $2 million EDL, $1 million PPP. The first thing I'd want to do is I'd want to make sure that the bank knew that. And it may be that the guidance comes out, the bank says, all right, well, look, all we're going to do is refinance the 2 million you already got, and $1 million is going to be forgiven, or they may let the 3 million stand. We don't know yet, because remember, you can use EIDL for other funds. So presumably you're just going to certify that I'm only going to use funds in one area, not two areas. So the other place where you could potentially use both, looks like I lost Gary. So the other place you could potentially use both is if you were doing, you get through the PPP period and you find that, hey, that's just not going to be enough to cover you to make it through, then you can apply for EIDL funds, or you could get PPP money, apply for EIDL funds to use for a different purpose, and then conceivably marry up with PPP funds at some point in the future. So those are your options available in terms of using both sources. So I lost Gary. I'm going to see if I have the ability to actually see the questions. Okay. So let me see if I've got, I think just looking through here, some of the stuff that was in this request, I think I've hit most of these. I think the only thing that I wanted to definitely hit on is with regards to, we've got one here that is relevant for foreign ownership. Got another thing for overtime, and then we also have another one that came down to, let's see. Yeah, so basically, the one thing you're gonna have to be careful of when it comes to independent contractors and employees is they have to actually reside in the US. So whether independent contractors or employees, they have to reside in the US. It's silent on whether or not they have to be US citizens. That's because citizenship for the purpose of taxation has various definitions. If someone pays US taxes, they are a US resident for the purposes of the test on income taxes. So one would assume that they will also qualify for this purpose. So I guess that would apply to H-1 visa holders and people like that. There was a question on there around if a company is owned by a foreign person, 75%, it's silent on who the ownership is for the purposes of PPP. So all it says, it has to be something that qualified as a small business and it didn't have non-affiliation. It didn't otherwise break non-affiliation rules based on the employee count. So in that case, you probably would need to look at, do you pop the 500 employee count or not? And otherwise have to then take a closer look at the affiliation rules. So from what I've read so far, it seems that it's okay if the ultimate, that if there is a foreign partner. I haven't seen anything to the contrary other than the affiliation language associated with the definition of a small business concern. So let's see if we've got any more questions that are rolled in here. With union workers, I don't think that's going to be any different than anybody else that's out there in terms of what you can pay. For this single employee corporation, gross 800 a month paycheck net. Again, go back to the calculation of payroll in that case, and then these other expenses could be offset against it. So I'm in a partnership with all partners being self-employed. We covered that earlier. I'm in the same boat. That's really going to be, it's silent on what happens to self-employed partners, but we're taking the position, absent anything else, that that we're going to include up to $100,000, still meeting the same definition of payroll for any partners that are self-employed. So that would apply to us, law firms, conceivably, or other things that are partnerships where you've got active partners that are paying self-employment earnings, because it's really no different than being self-employed on a Schedule C from a tax perspective. Hopefully this is still rest of you guys, but I'm going to go ahead and close it out, and I hope you guys enjoy the rest of your day and are trying to stay safe out there and healthy, and that this was helpful. If you have any other questions, remember FAQ@trustbgw.com. And obviously, we'll be doing the videos on YouTube to explain what we know. And then we'll also be doing more of these webinars going forward in the future. So again, hope you guys have an awesome afternoon from here, and thank you very much for being on.